Are you looking to open up a trading account except you don't know the difference between a cash account, a margin account, or what the PDT rule is? I'm going to go over all of that in this video, so be sure to stay tuned. Hey guys, Ivanov Trades here with another video lesson, and today I'm going to go over the differences between a cash account and a margin account and exactly how you can get around the PDT rule. I know that's a really big topic for us traders who are growing with small accounts, because the PDT rule is a very large restriction on our trading, but don't worry, because there are ways to avoid the PDT rule. So make sure you stick around till the end of that video, because I'm gonna give you guys a whole bunch of information. And actually this video is going to be a little preview of my upcoming penny stock course. I'm creating a course right now. It should be released in around 2 to 3 weeks, and it's going to be just an entire online course on exactly how to get started on trading penny stocks. I'm going to go over my history and how I got into penny stocks. I'm going to go over the stock market basics, different terminologies, how to set up a trading account like I'm doing right now, different brokerages, and all my different strategies and risk management, and how to become a consistent, profitable trader. So if you would like to get some introductory pricing on this course, I will be offering it to anyone who is in my Facebook group called the Day Traders Club. So here it is right here. I'm going to drop a link down in the description. So if you are interested in getting introductory pricing on this course, be sure you click the link down below and join this Facebook group, the Day Traders Club, because everyone in there, I'll be sending out invites to this course. It's going to be less than $500 as the introductory price. I cannot say it'll be under that price forever, but the sooner you get in, the better, because as I'm still small, I can help you guys out one-on-one. I have, all of my top students right now are ones who, they talk to me one-on-one. My best trader, Kyle, he talks to me every single day, asking me different insights and strategies and just, my opinion on different stocks. And same with Ken, he keeps constant contact with me, and it's no surprise that they're both my best traders. So if you want to be the best, you have to put in the hard work, you have to put in the dedication, you have to, have a mentor that you can learn from, and that's what I'm trying to be. So the link is down below to the Day Traders Club, and also it's a good group to join, even if you're not interested in joining the course, mainly because we have a group of almost 200 traders here who trade NASDAQs, OTCs, swing traders, day traders, cryptocurrencies, Forex, anything. We give each other opinions, insights, our watch lists, different stocks, how we're trading them, and a whole bunch of stuff like that. So like I said, link down below. Well, let's just get right into this preview of my upcoming course. So the section we're going to be talking about is chapter 3. And it's about opening a trading account. Okay, so here's chapter 3, opening a trading account. So this chapter basically goes over account building 101, and I'm going to talk about how much is really needed to trade, choosing the right brokerage for you, choosing an account type, the differences between being a day trader versus a swing trader, and some capital management rules. So first I'm going to go into the differences between a cash account and margin account. So a cash account is a type of account that asks you to deposit cash, and then you can use that cash to buy stocks, bonds, mutual funds, or other investments. It's not much more complicated than that. You can invest with however much money you have in that account. So say you have a $2,000 account. With that $2,000 account, you're able to buy $2,000 worth of any security. Now with a margin account, this is a type of brokerage account in which the broker-dealer lends the investor cash using the account as collateral so you can purchase securities. And what margin basically does is it increases an investor's purchasing power, but also exposes investors, you know, with a way larger risk potential. This is also known as using leverage. So usually brokerages, they have a 1-to-6 leverage. So say that you have a $2,000 deposit in your margin account, then you would be able to trade with $12,000 worth of cash borrowed from your broker. And if you're just day trading with this cash, the interest rates are very, very minimal. But if you're swing trading with leverage, then you will have to consider the costs of interest because you are borrowing money. And now let's talk about the pattern day trader rule. And the PDT rule is what everyone calls it. And this applies to a margin customer that day trades 4 or more times in 5 business days. Under the rules, a pattern day trader must maintain minimum equity of $25,000 on any day that the customer day trades. The required minimum equity must be in the account prior to any day trading activities. If the account falls below the $25,000 requirement, then the pattern day trader will not be permitted to day trade until the account is restored to the $25,000 minimum equity level. Now, the key thing about this rule is that this applies to margin accounts only. This applies to margin accounts only. Let me make that clear. This does not apply to cash accounts. And I keep seeing these people on Twitter, on all these different Facebook groups, brand new traders who are worried about getting around the PDT rule. But, you know, there's an obvious path around it. You can have a cash account. So let's just break down and understand the pattern day trader rule real fast. So what does a day trade actually mean? Well, a day trade counts on the amount of times you buy a stock and sell the same stock in a specific day. But the most important thing about it is that it counts the number of buys and not sells. For example, say let's buy 50 shares of stock ABCD on Monday, and then I sell those same 50 shares on the same day. This is one day trade. If I buy 100 shares of ABCD on Monday, then sell 25 at noon, and then another 25 in the afternoon, this is one day trade. I'm sorry, that 100 should be 50. Let me change that real fast. Let's circumvent any possible confusion here. Okay, so yeah, so if I buy 50 shares of ABCD on Monday, I sell 25 at noon and another 25 in the afternoon, that counts as one day trade because you bought it one time. It doesn't matter how many times you sell, it goes off of your intent. You intended to buy it one time, so that counts as one day trade because you sold that one buy in the same day. If you buy 50 shares in Monday morning and then another $50 shares, let me start over. If I buy 50 shares Monday morning and then another 50 shares at noon, and then I sell the total 100 shares in the afternoon, this is 2 day trades, you know, because you bought it 2 times. Your intent was to trade 2 times during the day. You bought it one time in the morning and you bought it another time in the afternoon. Just because you sold those both buys with one sell, that doesn't mean it's one day trade. This is 2 day trades. Now let's go even further. If I buy 50 shares of stock ABCD on Monday and sell 25 on Monday, and then I sell 25 on Tuesday, the next day, this still counts as one day trade. It doesn't matter that you didn't sell your whole position, you still bought and sold in the same day. And I really hope this makes it clear. If you have any questions on this, feel free to contact me on Facebook. You can email me at ivanovinvestments@gmail.com. If you have any questions, just let me know and I'll clarify it for you. So how can we get around the PDT rule? Well, as of September 5th, 2017, cash account transactions are now restricted to a T+2 settlement. Let me fix that. they are now restricted to a T+2 settlement because they used to be T+3. So what does this mean, T+2? This means that for any amount of money that you place in a day trade, that money has to settle for 2 days until you can use that money again. For example, say you have a cash account that has $2,000 in it. If you day trade $1,000 worth of stocks on Monday, that same $1,000 cannot be used until Wednesday, 2 days afterwards. However, you still have your other $1,000 that you can day trade as you please on Tuesday. That $1,000 that you trade on Tuesday will not be available until Thursday, but your funds from Monday will be settled on Wednesday, so you are now effectively able to day trade every single day. So the general rule with a cash account is, if you want to day trade, if you'd like to place one day trade every day, then you have to use half of your account size. Like in the previous example, if you have a $2,000 account, then each day you can trade with $1,000 and still place one day trade every single day. If you would like to trade 2 times a day every single day, then each trade you use 1/4 of your account size. So if you have a $2,000 account, then each trade would be $500. So with a cash account, you are only limited by the amount of money you have in your account, as well as how much you like to invest per trade. You are not limited by any 3-day trades every 5 business days or some, stuff like that. You can trade as much as you want, granted you have the money for it, and granted the amount of size you want to put in to your trades. So now let's go over the pros and cons of cash accounts. So the pros of a cash account: you are not limited by the pattern day trader rule, meaning you can place as many trades as you want given you have the money for it. You do not have to save your day trades like you would on a margin account and potentially miss out on these spontaneous news plays. The most recent one was ALRT, which went up 12,000%. I would be very devastated if I had a margin account and I had no more day trades left and I missed out on a huge move like that. Now the cons with a cash account is that this makes it very easy to overtrade, and overtrading is one of the main killers of new traders because they want to just trade as many things as they want. They don't focus on plays that are the best of the best, and they just want to get any amount of money that they can, and this is very, very detrimental to new traders. And so you have to be able to keep yourself controlled and disciplined and focus on only trading the best trades. Also, if you do trade multiple times per day, the commission costs can really add up if you don't pay attention. So be sure that you understand your commission structure with whatever broker you go with. Now the pros and cons of a margin account. So the pros of a margin account, and the reason why people use them, is because it allows you to use leverage. However, because we're focusing on OTC OTC penny stocks, I have never used leverage, and I would never recommend for penny stocks. It's only good to use leverage if you're trading these blue chip stocks and you're scalping. But that's not what I trade, and that's not what I teach, so I will not go into that. Being limited to 3 day trades every 5 days forces you to learn how to trade only the best setups. So having a margin account almost forces you to become a disciplined trader, because you will have to wait until you find the trade where you say, okay, this is the one where all the odds are on my side and I'm the most likely to profit off of it. When you're limited to 3 day trades, you're not going to trade these random speculative plays, just for fun, because you don't want to waste your trades. And also with the margin account is that it allows you to short stocks, which is not important in OTC trading. If you're trading NASDAQ penny stocks and you want to short, this could be an option for you. That's not what this DVD teaches or this course teaches, so I will not be talking about that. Now, the cons of a margin account is that being limited to 3-day trades every 5 days can cause you to miss out on some amazing news plays, like I said before. And your emotions will eat you up alive if you waste your trade on some dumb, stupid play that you knew wasn't gonna work. However, if you're able to learn from that mistake, then that can actually be very beneficial. Now, the main thing that I don't like about margin accounts and having the day trader rule is that say you want to buy some penny stock. Say it's a penny stock that's worth 10 cents. You want to buy 10,000 shares of it, and when you have a margin account, you place a limit order at 10 cents. Now, say you only get filled for 2,000 shares and the stock price goes up. Well, if you modify your limit order and raise it up to match the stock price, if you buy the rest of your shares, that will count as another day trade. So that will effectively turn that 1 day trade into 2 day trades. And if you're not careful and you don't pay attention to how many day trades you have left, this can easily cause you to break the PDT restriction and effectively block your account from day trading for 90 days. And that's very, very detrimental to a trader, obviously. So you do not want to even be encountered with that situation. So, general thoughts about all of this: if you're starting out with a small account and you are trading penny stocks, and especially OTC penny stocks, I highly recommend that you open up a cash account. As far as amount that I recommend you start out with, I'd recommend you start out with at least $1,000, so you can and you can break up that $1,000 when you're starting out. I would recommend to break it up into 4 trades, so you really reduce your risk and you're not, putting your whole account size in, and you're just getting used to trading with real money and dealing with your emotions. I do not recommend on your first trade to put in your full account size, because even if you have paper trading is good for learning the strategies and the chart patterns. But when you're paper trading, you do not deal with real money, meaning you don't deal with emotions, because if you lose that paper money, who cares? And you can try all you want to make it seem like real money, but no matter what, you will not face the same emotions that you would with real money. So, last thoughts: if you're starting out trading stocks, highly recommend you start out with at least $1,000, and I highly recommend you do not start out with your full size. You have to start out small, and you slowly build up your confidence as you get better and as you become more profitable and consistent. As you become more consistent, slowly bump up your account size and find the spot where you're comfortable with. So that's basically it on this specific video. If you guys want to see more of this course, please join my Facebook group, and I'll be sending out introductory pricing. Sorry, I couldn't think. I'll be sending out introductory pricing to everyone in that Facebook group, and I should be releasing this in around 2 to 3 weeks. So if you guys enjoy this, please leave a comment down below saying, "I want to learn more." This time it's 5 words. I want to learn more. I want to see who is actually interested in a course like this, because if no one's interested, then I'm not going to make it, of course. But if you guys show some interest, then that will make me more motivated to release it and help you guys out with your trading. So if you enjoyed this video, please leave that comment down below. I want to learn more. If this is your first time watching my channel, please hit that subscribe button, hit that like button, and also look at my other videos, because I have over 45 hours of free educational content purely on penny stock trading. So if you want to learn anything else, please, I have so much information in my videos. Take the time to watch them, and if you have any specific questions, you can feel free to contact me. That's it for today, guys. I'll try my best to release a watch list tonight, but I'm going to a concert, so I may not be able to. However, I will be up and ready pre-market at 5:30 a.m. on the West Coast Monday morning to be ready to give you guys free alerts. So if you guys need any more information, you can visit my website, www.ivanovtrades.com, and I'll see you guys tomorrow. Thank you very much for watching.